Good evening, everyone. This is Tyler from Securities Trading. It is Tuesday evening here, and I'm going to answer a question that people have asked me, and that is, what is a Schedule 13D? This is a very common term in institutional investing, and it's something that people should understand and take note of when they see, because this can be very beneficial for a stock investor, a day trader, swing trader, any kind of trader out there. This is a very important term to understand. Okay, a Schedule 13D is a form that is required by the U.S. Securities and Exchange Commission, and this is when a person or group acquires more than 5% of any class of a company's share. And this information must be disclosed within 10 days of the transaction occurring. And the reason behind this is investors often will decide to buy a large segment of a company's stock. And these could be activist investors, it could be it could be institutional investors who have a lot of faith in the stock or who think the stock is undervalued. Or it could even be some kind of manipulation here. And when a person or group acquires this significant stake of stock, which is at least 5%, the SEC has to know, because this can actually have a lot of impact and sway on the price of a stock. Often, after more than 5% has been acquired by a notable firm or a company, this will have a lot of impact on the price of the stock, and generally you'll see a movement, a positive float occur shortly thereafter, and it may continue for weeks or months after this point. Okay, once the disclosure has been filed with the SEC, the public company and the exchange on which the company trades are notified of this owner, or beneficial owner as it's known. They call this an owner because in this situation they own such a large stake of the stock, and as stated before, they can have a lot of sway on the price of the stock. And this is a way of entailing more transparency for stock buyer, the company, and the public as a whole to understand what's going on. And there's also some other things tied to this, and there's another term known as a Schedule 13G, and this is something similar to 13D. I'll talk about that in a different video. It's also noteworthy that in the 13D, this can actually give a company the ability to have sway on the board of a company. Basically, this isn't always the case. It depends on the kind of company. It depends on the board, and there's other factors here, but this is actually one way that large companies will tend to try to have ownership in a major company. This can get a little tricky at times for either party, but just keep in mind that this 13D when you see it, it's very beneficial as a day trader, because what often happens is that you'll see a direct reflection on price. You see penny stocks, you see mid cap stocks, large caps. This term shows up, and often there's a huge spike for the stock that day, and people often don't understand what this is, and that's kind of the breakdown of it.